Is the crypto market on the verge of an epic breakout or a devastating crash? The signals are completely crossed. Some analysts are calling for a massive institutional-led pump to $150,000 for Bitcoin and an incredible $10,000 for Ethereum. They're pointing to massive whale buys and progress on Solana ETFs as proof that big money is all in. But other respected traders are sounding the alarm, warning that a very bearish pattern is forming right now. They're predicting a nasty 30 to 40% correction that could wipe out anyone who gets too greedy. With Bitcoin hanging on to the $108,000 support level and the Federal Reserve's next move on interest rates keeping everyone on edge, September is shaping up to be a make or break month. You need to hear these conflicting arguments before deciding on your next move. In the latest video from Altcoin Daily, the host explains his recent shift from Bitcoin to Ethereum, betting on its potential to outperform in the coming months. He points out that on-chain data shows large investors and institutions are heavily buying Ethereum during the current dip, while smaller retail investors are selling off. A bold prediction is made for Bitcoin to reach $150,000 by the year's end, with an even stronger belief that Ethereum will show greater percentage gains over the next 3 to 6 months. The video also touches on the common expectation of a bearish September for crypto, suggesting it could be a prime buying opportunity before a typically strong fourth quarter. A large part of the discussion centers on insights from Tom Lee, who argues that Wall Street favors Ethereum much more than Bitcoin. Lee compares Ethereum to a high-growth tech stock, highlighting its 100% uptime, the scaling capabilities of its Layer 2 solutions, and the boom in stablecoins, most of which are built on Ethereum. He describes Wall Street's move to tokenize real-world assets on Ethereum as a pivotal moment, similar to when the US dollar left the gold standard in 1971, which paved the way for a massive expansion of financial products. The host concludes that this cycle may belong to Ethereum due to this foundational adoption by major financial institutions. The video's bullish stance on Ethereum, particularly its potential to outperform Bitcoin, taps into a significant narrative currently shaping the market. The idea of a great rotation from Bitcoin to Ethereum is gaining traction, supported by recent on-chain data showing large whale movements from Bitcoin to ETH. As of early September 2025, Bitcoin is trading around $108,000 to $109,000, while Ethereum is hovering near $4,300. While September has historically been a challenging month for crypto, the video's suggestion that a dip could be a buying opportunity aligns with the broader bull market sentiment. In the latest video from Crypto Rover, the host explains that Bitcoin is currently at a very important support level while trading inside a large falling wedge pattern. He believes this is a strong signal for a reversal and has a price target of $123,000. He's still holding his large trades on both Bitcoin and Ethereum, noting his Bitcoin position is at a small loss, but he's convinced a bottom is near. This confidence comes from seeing a bullish divergence on the MACD, which suggests selling pressure is weakening. He mentions that due to the Labor Day holiday, he doesn't expect much market action today, but warns that volatility will pick up later in the week with the release of jobless claims data. These figures are important ahead of the next FOMC meeting where interest rate cuts are expected. He also points out that historically, when Changpeng Zhao, CZ, has called a market bottom, he's been right, and CZ is signaling that the bottom is in once again. Finally, he looks at liquidity heat maps, which show more liquidity above the current prices for both Bitcoin and Ethereum, supporting the idea of an upward move. The video's analysis hinges on classic technical patterns and the historical buy-the-dip signals from influential figures like CZ. While the falling wedge and bullish divergence are established indicators, the current market is showing signs of nervousness. Bitcoin is struggling to stay above $108,000, partly due to the Labor Day holiday in the US reducing trading volume and also because of concerns about a large whale selling off their holdings. The price is currently hovering around $108,478, which is about 13% below its all-time high from mid-August. Ethereum is trading at approximately $4,353, also down from its recent peak. The overall crypto market sentiment has shifted from optimism to caution, with the fear and greed index dropping significantly in late August. This week's economic data, particularly manufacturing PMI data and the upcoming U.S. non-farm payrolls report, will be watched closely as they could influence the Federal Reserve's decision on interest rate cuts at the next FOMC meeting. While CZ continues to advise against panic selling, the market is currently facing headwinds from declining spot Bitcoin ETF inflows and broader weakness in traditional markets. The situation presents a mixed picture. Technical patterns suggest a potential bounce, but macroeconomic factors and current market jitters suggest caution is warranted. In the latest video from the Crypto Tips channel, hosts Heidi and Toby celebrate hitting 250,000 subscribers. They take a trip down memory lane, recalling the channel's beginnings in 2016 and some of the wildest moments in their crypto journey. They discuss calling out major scams like Celsius and FTX before they collapsed, and reminisce about the early days of crypto, including the BitConnect saga and the infamous DAO hack that rocked Ethereum. They also share personal anecdotes about being recognized by fans in unexpected places, which they say reinforces their commitment to providing honest content. Looking ahead, they're launching a separate podcast to talk about a wider range of topics they're passionate about, including health, travel, second citizenships, and even some conspiracy theories. They're also running a giveaway with prizes like a Trezor hardware wallet and a free year's membership to learningcrypto.com to thank their subscribers. Heidi and Toby's reflections on their journey offer a valuable perspective in a market that often feels like it has a very short memory. Their stories of navigating scams like Celsius and FTX are a good reminder of the risks that are still very much present in the crypto world. While the market has matured since the Wild West days they described, the core principles of being cautious and doing your own homework haven't changed. The current crypto landscape is a mixed bag. We're seeing some positive signs with institutional interest and clearer regulatory frameworks starting to emerge in some parts of the world. However, the market is still very much driven by speculation and can be easily swayed by hype. Their plan to launch a new podcast covering a broader range of topics is a smart move. It allows them to connect with their audience on a more personal level and tap into the growing interest in how crypto intersects with other parts of life, from finance to personal freedom. In the latest video from Lark Davis, the main concern is the historically weak performance of crypto markets in September. He points out that while it's not always a terrible month, it often sees lower liquidity, and this year could bring more choppy price action. The video touches on recent PCE inflation numbers, which are ticking higher and could make the Federal Reserve hesitant to cut interest rates in their upcoming meeting. This sticky inflation is presented as a headwind for risk assets like Bitcoin. From a technical standpoint, Bitcoin is shown to be in a downtrend, struggling to stay above support around $107,000 and facing a key resistance level at $112,000. In contrast, Ethereum's chart appears stronger, holding up at its 20-day EMA of about $4,400. There's also positive news for Solana, with multiple firms like VanEck and Franklin updating their ETF filings, suggesting progress is being made with the SEC. The video also notes that a bullish golden cross pattern is forming on the chart for altcoins outside of the top 10, hinting that an altcoin season could be in play. The video's cautious tone for September seems to reflect the current market mood. Right now, Bitcoin is trading around $108,000 to $109,000, which lines up with the support level mentioned in the analysis. The market is indeed showing signs of pressure, with some analysts pointing to whale activity and decreasing spot ETF inflows as reasons for the turbulence. The discussion around the Federal Reserve's upcoming decision is critical. While recent PCE data met expectations, persistent inflation above the 2% target complicates the case for an immediate rate cut, even though markets are largely expecting one. This uncertainty is likely contributing to the choppy conditions Lark Davis described. On the Solana front, the news about updated ETF filings is a significant development. This positive back and forth with the SEC, as analysts call it, is a strong indicator that a spot Solana ETF is moving closer to reality, even without a firm timeline. Solana's price is hovering just under the $200 mark, reflecting the broader market downturn, but also the underlying positive sentiment from these institutional developments. The video's mention of Chinese companies buying Bitcoin is also part of a larger trend of corporate and even institutional accumulation, which continues to act as a significant long-term market driver despite short-term volatility. In the latest video from the Ben Cowan channel, he argues that we're about to see a final rotation of money back into Bitcoin during September and October. He explains that historical data often shows September as a major turning point for Bitcoin's market share or dominance. Cowan presents a simple case. It doesn't matter if Bitcoin's price goes up, down, or sideways. In all three situations, he expects Bitcoin's dominance to increase. If Bitcoin's price drops below its 20-week moving average, he thinks altcoins will sell off heavily out of fear, causing people to move back to the relative safety of Bitcoin. If Bitcoin's price holds strong and starts a rally, it will lead the entire market, pulling dominance up with it. And if the price just moves sideways, he believes altcoins tend to lose value against Bitcoin. He also touches on the Ethereum/Bitcoin pairing, suggesting it's likely near a temporary peak and will probably dip before it tries to move significantly higher later in the year, fitting his theory of a short-term flow of funds back to Bitcoin. Ben Cowan's analysis hinges on historical, cyclical patterns, which is his well-known approach. Looking at the current market, his theory faces some interesting headwinds. As of early September 2025, Bitcoin has been showing weakness, struggling to stay above the $108,000 level after a drop from its August highs. This price action puts it right in the zone of the 20-week moving average he discusses, making his scenarios immediately relevant. However, the narrative this year is heavily influenced by factors that weren't as prominent in past cycles. In the latest video from Crypto's Russ, the host discusses some big financial news and what it might mean for the crypto market. He starts by talking about a recent court ruling that declared government tariffs unconstitutional, suggesting that removing them could be good for the market by easing inflation. However, he notes that Bitcoin and the rest of the crypto world didn't really react to this news. Looking ahead, he points to the Federal Reserve's Beige Book and a major jobs report as key events to watch. The video suggests that we're back to a more normal market where bad economic news is actually bad for prices. The video presents a hopeful long-term view while acknowledging potential short-term turbulence, which is a common theme in crypto analysis. The host's mention of Bitcoin at $108,000, Ethereum at over $4,300, and Solana above $200 aligns with current market prices, lending credibility to the timeliness of his observations. Indeed, the market is showing signs of nervousness as September begins, with Bitcoin struggling to hold the $108,000 level and the broader market seeing declines. This aligns with historical data suggesting September is often a difficult month for crypto. In the latest video from the Crypto Banter channel, trader David shares a profitable trend-following strategy he calls Dead Zone, which he presents as a better alternative to the common MACD indicator. He walks through a specific combination of 4 free indicators on TradingView used for trading Bitcoin and Ethereum on shorter timeframes like the 15-minute, 30-minute, and 1-hour charts. The strategy uses the T3 indicator for trend direction, then confirms entries with 2 non-correlated indicators, the Wada-Adder Explosion, WTA, and the Volume Flow indicator. For managing risk, the strategy sets the stop-loss using ATR bands. David provides detailed backtesting results showing impressive returns such as 862% on a 15-minute Bitcoin chart and a massive 1,671% on a 1-hour Ethereum chart, while also being transparent about the significant drawdowns that can occur. He also shows how these strategies can be converted into automated trading bots. The strategy detailed in the video taps into the growing field of algorithmic trading, which is becoming more accessible to retail traders. Using a defined, rule-based system is a disciplined approach, which is particularly relevant in the current crypto market where sentiment can be volatile. The Crypto Fear and Greed Index is currently at 46, indicating fear, which often leads to emotional decision-making that automated systems can help avoid. Bitcoin is currently trading around $107,866, down slightly, while Ethereum is hovering near $4,398. These price levels have been tested recently, and having a predefined strategy for entries and exits is a sound concept in such conditions. In the latest video from DataDash, the discussion centers on whether Bitcoin has found a local bottom. The analysis points to a critical support level around $107,000, which is an anchored VWAP, volume-weighted average price, from a low back in April. This level has proven to be strong support before, and the price has recently bounced off it again. The short-term strategy involves watching for Bitcoin to reclaim its weekly pivot point to re-enter the previous week's trading range. If that happens, the price could be drawn towards higher volume areas potentially rotating up to the top of the range around $113,000. On a larger time frame, the video suggests that if the current lows hold, September could see a move back towards the $113,000 monthly average and potentially a larger run back to the all-time high region of $125,000 to $126,000. However, a strong warning is issued. A very bearish harmonic pattern is forming, suggesting that if Bitcoin pushes up to the $130,000 region in September, it could be followed by a significant 30 to 40% correction, similar to the one seen in January. The video also notes that while Bitcoin ETF flows were mostly flat for August, the crypto fear and greed index is now in fear, which has historically been a reasonable time to consider new positions at key support levels. Finally, brief updates are given on the S&P 500, which continues to grind to new highs, and on gold and silver, which are both showing bullish breakouts and are expected to move higher. The analysis in the video aligns well with the current market's cautious atmosphere. Bitcoin is indeed hovering around the $108,000 mark after dipping to the $107,000 level mentioned. This price action confirms the significance of this support zone. The broader market sentiment is shaky, with the crypto fear and greed index currently sitting at 46, indicating fear. This supports the video's point that fear is present at a key technical level. September has historically been a challenging month for Bitcoin, with an average loss of around 6%, which adds weight to the concerns about a potential correction. In the latest video from Crypto Wendy, she covers Planck Network, a project aiming to fix the centralization problem in AI computing. Right now, a few tech giants control most of the high-performance AI power. Planck Network is building a Layer 0 blockchain specifically for AI and pumping decentralized physical infrastructure networks to create a globally shared pool of GPU power. The idea is to let anyone with a GPU contribute and get rewarded. The focus on decentralized AI and DePIN is incredibly timely, as the demand for GPU power continues to explode. The project's value proposition of cutting compute costs by 90% is a direct challenge to the expensive, centralized model dominated by giants like NVIDIA, whose H100 GPUs can cost upwards of $25,000 per unit. This high cost creates a clear opening for more affordable, decentralized alternatives. Planck Network is entering a competitive field with established players like Render Network and Akash, but its approach as a Layer 0 for AI and its co-staking model for enterprise-grade hardware could be a real differentiator. The backing from Microsoft and Google for startups adds a layer of credibility that many newer projects lack. However, the token launch isn't until October 2025. In the fast-moving crypto space, a year is a very long time. While the overall market sentiment for AI tokens is strong, with the sector seeing significant capital inflows, Planck will need to continuously demonstrate progress to maintain momentum and capture attention until its launch. September is also historically a shaky month for the crypto market, which could affect sentiment across the board. In the latest video from The Modern Investor, the host discusses the widespread expectation that the crypto market is heading for much higher prices in the coming weeks, particularly in September and October. A big part of this optimism is tied to the potential approval of several ETFs in the United States. Ethereum is positioned as the main force expected to pull the entire market to new all-time highs, fueled by huge institutional purchases, including announcements of $500 million and $1.3 billion acquisitions. A trader's analysis is shared, suggesting that if Bitcoin reaches $150,000, Ethereum could hit $8,500 based on historical data where E1000 market cap reached about 35% of Bitcoins. However, the host feels even these numbers might be conservative given the current rate of accumulation and suggests that $10,000 to $11,500 ETH is plausible. The video also covers smaller but steady institutional buys, like the Smarter Web company adding 295 Bitcoin to its treasury. Finally, there's significant news from Grayscale, which has registered new trust for Cardano and Hedera Hashgraph, signaling a move towards creating ETFs for these altcoins. This is viewed as particularly promising due to recent SEC rule changes that could streamline ETF approvals for coins that already have futures products on platforms like Coinbase. The videos focus on institutional inflows and ETF approvals as the primary drivers for the next market surge aligns well with current conditions. The market is indeed showing a fascinating divergence where Bitcoin ETFs saw their first monthly outflow of around $751 million in August, while Ethereum ETFs pulled in a massive $3.9 billion. This suggests a portfolio rebalancing among large players who may see more immediate upside in Ethereum, a sentiment echoed in the video. Right now, Bitcoin is trading around $108,000 to $109,000, showing some weakness after a strong run. Ethereum is hovering around $4,300, consolidating after recently touching higher levels.